So let's talk about gold. It has been on an absolute tear, just smashing records left and right. And it's got everyone wondering, what's driving this thing? We all see the price going up, but the real story, the one the insiders are watching, well, that's kind of hidden just beneath the surface. So today, let's pull back that curtain and look at the data the pros are watching, because it might just tell a very, very different story.
I mean, look at this. The headlines are just breathtaking. Gold has blasted past $4,900 an ounce, hitting new all-time highs. Seriously, this isn't just a normal rally. It's a crazy move that has got everyone talking. The momentum, it just feels unstoppable, right? And yeah, that brings us to the big question, doesn't it? Whenever a market gets this hot, you have to stop and ask, is this thing for real? Is the foundation solid, or are we all standing on some seriously shaky ground? That's the market mystery we're going to dig into.
To solve it, we can't just look at the price. We need an insider's tool. We're going to dive into the special report that cuts through all the noise and shows us the very DNA of the market, what the biggest players are actually doing with their money.
And this tool, it's called the Commitments of Traders Report, but really everyone just calls it the COT report. Think of it as our X-ray into the market. It's put out by the US government, and it shows us the exact positions, the bets, really, that's what they are, of all the major players. It is, without a doubt, the clearest picture we can get of who's bullish and who's bearish. And what's great is that it's like clockwork. The data gets collected every Tuesday, and the report hits our desks every Friday. So we get this really regular, really reliable pulse of what's happening just under the hood.
Okay, so let's meet the main characters in our story. You've basically got these two dominant forces in the gold market, and their totally opposite strategies are really at the heart of this whole mystery. So on one side, you have the commercials. Now, these are the big dogs, the major banks, the producers, the people who actually use physical gold. They're known as the smart money because their goal isn't to speculate, it's to manage risk, and they tend to sell when prices get really high. Then, in the other corner, you have managed money. Think hedge funds, big-time speculators. Their motive is totally different. It's pure profit. They're trend followers, so they buy into rallies hoping to ride that wave even higher.
And this, right here, this is the whole ballgame. This quote nails why we watch the commercials so closely. Historically, they have this almost spooky ability to be on the right side of the trade at the huge turning points, the absolute peaks and troughs. So when they make a big move, you better believe people pay attention.
So, with all that in mind, let's use our new tool and start reading the tea leaves. What is the latest COT report from January actually telling us about this record-breaking gold rally? Now, I know, this just looks like a giant wall of numbers. But what's so cool is that this is the real deal. This is exactly what the pros are poring over every single Friday, trying to find an edge. And hidden in all this data is a huge contradiction. On the surface, of course, everything looks amazing. Like we've been saying, prices are just exploding higher. And those trend followers, the managed money, they're all piling in, chasing this rally for all it's worth. But, and this is a huge but, here's our first major clue. The insiders, the smart money, commercials, are doing the exact opposite. They are aggressively, and I mean aggressively, taking the other side of that trade. They're building one of the biggest bearish positions we have ever seen at a market peak. It's a historically large bet against this rally continuing. This just lays it all out, doesn't it? It's a battle of bets. You've got the speculators, managed money, who are heavily net long, meaning they have way more bets on prices rising. And then you have the commercials, who are extremely net short, signaling that they think this price is topping out and is about to reverse. It's a classic high-stake standoff. But wait, because the plot is about to thicken. This whole battle between traders isn't just happening on a computer screen. There's a real-world stress test going on in the physical gold market that adds a whole new layer to our story. So, real quick, here's what you need to know. There are basically two main gold prices. You've got the futures price in New York, which is for a paper contract, kind of like an IOU for gold down the road. Then you've got the spot price in London, which is for the actual physical metal that you can get your hands on right now. Now, in a normal, healthy market, these two prices trade almost identically. The difference between them, what they call the spread, it's usually just a couple of bucks. The market is just really, really efficient at keeping them in line. But recently, that whole mechanism just broke. That tiny spread didn't just widen, it blew out to an unprecedented $80. That's not a glitch, folks. That is a massive red flag that something is fundamentally wrong in the plumbing of the global gold market. And the reason why was actually pretty simple: logistics. You had all these restrictions. Flights were getting canceled. Major gold refineries had to shut down. And it created this huge bottleneck. It suddenly became incredibly hard and expensive to get physical gold bars from the vaults in London over to New York. And that real-world breakdown sent a shockwave through the financial market. Okay, so let's put all the clues together. We have a huge battle of bets in the futures market and a breakdown in the physical market. So what's the verdict? What's the key thing you should be watching? All right, here are the big takeaways. 1. The COT report is an amazing tool for seeing what the insiders are really up to. 2. We have a massive disagreement right now. The speculators are all in bullish, while the smart money is incredibly bearish. 3. History tells us that when the smart money bets this big against a trend, a reversal is usually not too far away. And finally, that stress between paper and physical gold shows this isn't just a trading game. There are real-world pressures at play.
Which leaves us with one last big question. I mean, everybody loves a good party, and this gold rally has been one for the ages, no doubt. But when you see the pros, the so-called smart money, all positioned so heavily for a fall, you just have to wonder, is the music about to stop?